Beautiful Wednesday morning. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. That's what we do. On Business Morning, I'm Ini John Mekwa. We start off with oil prices. It rose today on Wednesday on signs of weakening production in the United States and higher demand in Europe and China, as China buyers emerge after prices fell to new lows earlier this week. Brent crude futures gained 37 cents. That's about 0.6% to $62.52 a barrel, while for WTI it's at $59.53. Gained just about $1 about this time yesterday, but in the last couple of hours, 0.74% in the green. Both benchmarks had plunged to a 4-year low after OPEC Plus said that they were going to speed up output increases, which stoke fears of oversupply at a time when U.S. tariffs have spurred concerns about demand. However, lower oil prices in recent weeks have prompted some U.S. energy firms like Diamondback Energy and Coterra Energy to announce that they would cut some rigs, which analysts say should, over time, increase prices by reducing output. Crude stocks fell 4.5 million barrels in the week ended May 2nd, according to American Petroleum Institute figures. Prices also drew support from signs of demand improving. Consumers in China increased spending during the May Day celebration and as market participants returned after a 5-day holiday. In Europe, companies are expected to report growth of 0.4% in the first quarter earnings, improvement over the 1.7% drop that was expected. The Federal Reserve is widely expected to leave interest rates unchanged today. It's the D-Day, it's tariffs, Royal Economic Outlook. Well, President Bola Tinubu announced that the federal government will bar all ministries, departments, and agencies of government from procuring foreign goods and services where local alternatives exist. This move is part of a broader effort to strengthen local industries and reduce import dependence. The directive was one of the key resolutions adopted by the Federal Executive Council and was shared in a statement issued by Mr. Sunday Dare, the Special Advisor on Media and Public Communication to the President. According to the statement, the new policy, dubbed the Nigeria First policy, is designed to stimulate domestic production, enforce local content compliance, and overhaul the government's procurement practices. Following this, the Manufacturers Association of Nigeria, they've commended the federal government's Nigeria First policy, which prioritizes local-made goods and services. MAN's Director General Segun Ajayi Kadri sees it as a key step to boost local industries, economic growth, and job creation. Mr. Kadri notes that the proper implementation could raise GDP by 56% and reduce unemployment by 37%. He's emphasizing the need for collaboration between government, the private sector, and individuals to ensure success. The association is asking government agencies, especially the military and police, to lead by example by prioritizing made-in-Nigeria products in procurement, boosting consumer confidence in local goods. The National Identity Management Commission has announced the official approval for the launch of the National Identification Number Authentication application designed to provide seamless identity verification across the country. This move follows a directive from the President, Bola Tinubu, for the adoption of the app as a key tool for verification across various ministries, departments, and agencies. In a statement signed by NIMC's head of corporate communication, Kayode Adegoke, the Commission emphasizes that the introduction of the app aligns with its mandate to regulate a reliable national digital identity system for Nigerian citizens and legal residents. The platform aims to simplify identity verification processes while enhancing data security and privacy protection. NIMC notes that the app introduces a robust layer of protection for individuals granting them greater control over their personal data by requiring explicit consent before sharing information for Know Your Customer, that's the KYC process, or other verifications. The platform fosters trust, transparency, and user autonomy in managing digital identity. Yesterday, on the floor of the NGX,
3, 2, 1. Go ahead, please, Omar.
So that's the sound of the closing gong rung at the Nigerian exchange, marking a tribute to the late Dr. Pascal Dozie. Dr. Pascal Dozie, a Nigerian entrepreneur and businessman, was the founder and chief executive officer of Diamond Bank. He also served as the president of the Nigerian Stock Exchange at one point in his illustrious career. The special closing gong ceremony held in his honor featured tributes and reflections on his remarkable career, achievements, and his lasting impact on the Nigerian Exchange Group and the broader financial sector.
As we gather here today, not only to mourn, but to celebrate the life of a titan of our capital market, builder of institutions, from African Development Consulting Group to Diamond Bank, from MTN to Nigeria Economic Summit Group, from Lagos Chamber of Commerce to African Capital Alliance, and in fact all sectors of the economy. The Nigerian Stock Exchange in particular, who has been our, not only a past president, but a builder of this institution.
He used to tell my brothers and I, never a borrower or lender be. Now, when I look back on his life, he was into money. He was into lending people money, he was into raising money, he was just into money. And I think the two institutions that he definitely had a great love affair for was one, Diamond Bank, and also the exchange, because those were avenues to help people. I believe my father, were committed to platforms that would actually lift people up, because especially in that small business area, because those are the engines of growth.
So it's time for value for payments, and Stay Secure report by Visa shows that 76% of cash-only SMEs intend to acquire POS systems in the near future. 79% of those surveyed in Nigeria mostly or completely trust digital payments. 3.8% of consumers are planning to use digital payments more over the next 12 months. 72% of consumers find digital payments are quicker and simpler, while 78% appreciate the anytime, anywhere convenience that these digital platforms do provide. But are we there yet? Talking about contactless payment and tap to pay. That's what we are discussing this morning. I know a lot of us have heard about it. We've heard about contactless payment when we go outside the country, especially countries like the United States. It's a norm. But here in Nigeria, it's been introduced. However, how much of it has been adopted? How much has been adopted? And then there's the tap to pay also. So we look at the numbers and we look at, or we see the intention of especially the Central Bank of Nigeria, financial inclusion on the one hand, and then the digital part of it is on the other hand. And of course we know the cost is all somewhere in the middle of this. Last week when we had this similar conversation, the issue of the costs of these digital transactions seem to also pop out as a discouraging factor, apart from the issue of infrastructure, which still needs a lot of funding and development. But let's find out what the lead consultant at LB Integrated Resources Limited, former Chief Operating Officer of FinTech Association, are joining us for this conversation, Dr. Babatunde Obrema. Dr. Obrema, good morning and welcome to the program.
Good morning. Thanks for having me.
So when we go abroad, contactless payments it's just the norm. But here in Nigeria, it does seem we still have some hurdles to cross before it will become a commonplace.
Well, I would say yes and no. I mean, ideally, it should be a commonplace, but there's just the first one is security. People are afraid. If your card stolen, it means that someone can take money from your account. I mean, just like that, by just tapping. But let's face it, the maximum they can take on any transaction is just 15,000 naira. Now, the issue is that how many people can afford to lose 15,000 naira? The maximum they can take in a day is 50,000 naira based on the limit set by the central bank. But people still have those fears. So I think that's really one of the biggest challenge that we have, the issue of fear. I mean, the infrastructural issues also, like you had mentioned earlier on, it means that a lot of merchants will have to upgrade their POSs to POSs that are with NFC, that are NFC enabled. So that could also be a limitation towards its adoption. I think also you don't have consumer demand. I think that people are very comfortable with what they're using right now, that the demand for it, if the consumer demand for it increase, I mean, people will have no choice but to, merchants will have no choice to get those NFC enabled POSs. So I think those are the challenges that that exist in terms of not adopting it presently. But let's face it, it's very convenient. It makes transactions faster. It's you can either use on a card or your smartphone. You know, you can exit a transaction, a shop immediately. So I think that we need to. I also think that there isn't enough awareness, and I think that's a big challenge where when products are introduced, QR was introduced by NIMC some years ago. Contactless payments was actually in 2023 by CBN, June 2023. That's when the regulations and the frameworks came out. And then you had the same problem you have with e-Naira. So I think we need to create a situation where there's enough awareness, consumer awareness, before these things go into the market. I think that's one area both the CBN and banks need to spend a lot of money in terms of creating the awareness.
Yeah, so creating the awareness, but you also noted the fear of security. What do they do in other countries? I mean, even students in like the Asian countries, they just, it's the phone and then they're out. What kind of security features do they have that we seem to be missing out?
So I don't think that nothing is missing. So what happens is that the devices are NFC enabled, and the message between your card and the POS are encrypted through a tokenization process. So it's well secured. The fear here is just the fear of your card being stolen. I think that's just big. That's just big. And when you look at cases of theft, people's cards being stolen, or forced to ATMs to withdraw money and things like that, then those are just the fears. There's nothing missing in it.
What about tap to pay? Is that the same? Because tap to pay, I think there's still a bit of contact, yes?
Yeah, tap to pay is still a bit, so it's still, tap to pay is contactless really, because I mean, it's tap and then you go. So it's a means of contactless payment. I think that, so for people might want contactless, but I think the most secure are biometric-based solutions, either you're using your finger or your eyes. So I think that maybe we need to push that more. Maybe would that make people more comfortable than the tap and pay or the contactless. But the truth is that it's convenient, it's secure. It's just the fear.
But what about the costs? I mean,
Sorry?
Of course, when you talk about the cost, it's not just for the contactless payment, it's the digital generally, in the country. Some people have pointed to that as a discouraging factor.
Yes, so this is my personal opinion. It's a cashless environment, then the cost should be on cash, not on digital payments. As long as cash is free, people would, keep using cash. So if you want a cashless environment, then the penalty should be on cash. That's what they did in Sweden. So we need to look at the same here. I mean, if you a big penalty for using cash transactions will be if you take cash to the bank, you pay a big penalty for it. If you're withdrawing, you pay a big penalty, then people will move to digital platforms. I mean, there's been an improvement. When you look at 5 years ago, we're only doing 200 billion naira in digital payment transactions. Today, it's 1 quadrillion. So I think that there's been an improvement, but then we need to put penalty on cash. That way we can reduce the cost on digital payment, because banks pay a lot of money for processing cash, so moving cash, or to put cash in an ATM. Some banks even have rooms where they iron these dirty notes so that they can go into the ATM machines. So it's a whole huge cost, and it's not, if it's free, then it's not profitable for people cash. So let's put the premium on cash rather than cards.
Yeah, we even saw, I mean, I don't know if you saw the CBN's results for 2024. There was an increase in cash management, the cost of cash management for the CBN. So one would think, I mean, what's going on? Obviously, it should come from the CBN because they're the regulator, to try to move the cost from digital platforms. If you want to use a POS and all of that, it should be easier or cheaper than if you want to withdraw your cash from the POS. But it doesn't seem that's the situation. So I guess it's the CBN we should be looking at on this.
Interesting enough, I think it's not CBN. I think that there's actually a connect between monetary policy initiatives and the ideology of the fiscal policy operators. So CBN wants to achieve a credit environment. Politicians love cash. So the guys who are in charge of the fiscal policy use cash for a lot of stuff. So until the nexus between both fiscal and monetary policies to achieve a cashless environment, I think that CBN is a little bit handicapped. That's the way I see it.
Really? But one would have thought. But anyway, as you said earlier, if there's a demand, talking about the contactless, then the merchants will have no choice. How do you think we can drive that demand from the consumer's side?
Yeah, I'd say it comes back to consumer awareness. When consumers see the benefits and the convenience, everybody's looking to buy convenience. So once they realize that this is convenient, they will demand for it, and that's why we need to really promote it and create that awareness for it.
What about the issue of infrastructure? We see that also causing distrust, and deterring consumers' demand.
Well, that's a lot of factors affect that. I mean, for an exchange, the cost of POSs, most merchants don't want to pay that cost. They want banks to give it to them free, and or require money over time. So how do we bring down those costs? It comes to the fact that, I mean, for I need to grow, production needs to occur, some things need to happen locally. How do we start to assemble POSs locally, build it locally here, and bring down the costs? So until we're able to achieve a lower cost for these infrastructures, it will still continue to be a challenge. I mean, why should the woman selling granules not have a POS? But the cost will scare. So how do we bring down that cost? Or do we subsidize that? I mean, will government be willing to subsidize that so that POSs can be given free of charge or something? I think we need to look at those options if we really want to achieve a fully cashless environment.
Yeah, and the digital infrastructure, of the transactions, so we don't have hitches and in-between transactions.
So that has to do with infrastructures at the switching level and with the banks. And I think that there's a lot being done. There are a lot of more switching companies, the OPAs, the InterSwitch, NIMC, and I know that NIMC is also upgrading their facilities. So I think that will not really be a challenge. And because it's encrypted, some transaction can actually happen offline. So that's the beauty of the contactless payment. And there's a limit to how much you can do on with the contactless payment. So I don't think that that's really a challenge.
Well, when you talk about the contactless payments and then you talk of the rural areas in the country, it looks like they are still a bit further away. Can we just get them to the basics first before we go to the contactless? Because we're still talking about financial inclusion here.
So I think for the rural areas, what we need are biometric-based POS. I know there's a fintech Quax Mobile that's already brought one into the country. I know you just need this, just people registered and their biometrics are just used to make withdrawals. That's what we need for the rural areas right now. And it works from 2G to 4G, so you can actually do some transactions offline too. So I think those are the kind of innovations that we need to bring into the rural areas before we start going contactless there.
So how would you say our journey of financial inclusion generally now is doing in the country, the drive, the pace, of adoption and acceptance?
I think we are making progress. Can we do better? I think so. So I have a different concept. So there's no village you go to in Nigeria that you don't find somebody who needs financials in those locations. They collect money, they lend out money. The people in those communities trust them. Now, so practically a lot of people have some form of financial involvement, but they might not be included in the official financial system. Those guys, I think, are the ones we need to develop a policy for on how to bring them in and create sub-ledgers under them for the people that trust them. This guy will not come to the bank. That's a man or woman they trust, and we need to see how we can bring them to the financial system. I think that's an area that the regulators also need to look at. How do we do that? So that you can involve more people in the formal financial system through those babalajos, they call them, that the local people trust.
Yeah, well, I dream of the day when, you go to the open market and you don't need to look for cash before going there. I look forward to those days, not just for the babalajas, but, all those women right there. Well, thank you so much for your time, Dr. Babatunde Obrima, lead consultant, LV Integrated Resources, and former Chief Operating Officer of FinTech Association of Nigeria. Appreciate your time.
Thank you. It's a pleasure.
Channels Television. Just before we head to that conversation, we did told you earlier how the federal government now has an app to protect or verify identity through NIMC, the Identity Protection Office, Identity Data Management Office. And this, according to the federal government, is a way of protecting the new crude, which is data. I will give you details in this report.
Regulators, policymakers, industry leaders and stakeholders from across 23 African countries gather in Abuja for the Network of African Data Protection Authorities Conference and Annual General Meeting.
National Commissioner.
The three-day event is to reaffirm Nigeria's commitment to fostering a data protection landscape that safeguards privacy and enables innovation across Africa.
The Nigerian data protection sector now has a cumulative revenue of over $10 million within the space of 3 years. And the ecosystem has also created about 23,000 jobs, also within the space of 3 years.
Our presence in Abuja serves as a testament to the unity and shared aspiration of Africa. Together, we are committed to advancing towards a trustworthy digital environment that safeguards the privacy of individuals.
The initiative is commended by the international community in Nigeria.
As our digital partner on the continent, we are proud of Nigeria and believe the progress being made here deserves strong recognition.
The Nigerian government also uses the occasion to highlight efforts being made to expand broadband penetration in the country.
We are today committing $2 billion to expand broadband infrastructure by deploying additional 90,000 kilometers of fiber optic networks across the country.
Vice President Kashim Shettima, represented by his Chief of Staff, Senator Ibrahim Adeja, says the current government is working to ensure a robust data governance in the country.
Our commitment has not wavered. In 2024, Nigeria signed the Malabo Convention on Cybersecurity and Personal Data Protection. And just this March, the General Application Implementation Directive of the Nigeria Data Protection Act came into force. What you are witnessing here today, therefore, is not a coincidence.
The Network of African Data Protection Authorities was established in September 2016 in Burkina Faso to unite national data protection authorities and regulatory agencies across Africa. Over the next 3 days, participants will come together to share insights, collaborate, and exchange best practices, aiming to strike a harmonious balance between Africa's technological progress and the safeguarding of fundamental human rights. Emperor Simon, Channels Television News.
The Federal Executive Council has approved a proposed legislation aimed at creating the National Cocoa Management Board, the NCMB. The board is to oversee the regulation of cocoa industry to foster economic growth. In 2023, Nigeria produced cocoa beans and related products valued at 356.16 billion naira. In July 2024, the federal government said it would boost its cocoa production to 500,000 metric tons by this year, 2025, from 340,000 metric tons. That was the number in 2022. Let's see what to expect from this board. We've been talking about value addition and not just exporting of raw materials. Let's have this conversation with the president of National Cocoa Association, Mr. Bolanwa Mufutao. Mr. Mufutao, good morning and welcome to the program.
Good morning.
So what are your expectations from this board?
Thank you very much. The new Cocoa Management Board is a welcome development from the federal government. Why is it so? In 1987, when Cocoa Board was scrapped completely, both the marketing and the technical aspects was scrapped. And as a result of that, cocoa business is open, it's now a loose business. It belongs to every Dick and Harry to enter the business as they like, both local and international. But with this new management technical team that will only regulate the activities of cocoa stakeholders and ensure that every participant complies with rule and regulation of cocoa in Nigeria. Ab initio, this group has got nothing to do with pricing. Because even those who are still in the marketing board as at today, it's not a good story for both Ghana and Ivory Coast, because cocoa farmers are getting the best price in the world. But what we only lack is the methodology and approach to the quality that we are sending into the world market. Despite that Nigeria has the best aroma of cocoa.
Mr. Mufutao, can you hear me?
I can hear you.
Okay. I think that you have a device that's playing back where you are, because there are two of your voices. If you could please mute any device around you, so we're not hearing two voices and it's quite distracting. Have you done that? Okay, all right. So, of course, we do know that Nigeria has a huge potentials, and I think it was last week or so, we're talking about a bill that's supposed to compel every manufacturer to add at least 30% value to every raw material before it is being exported. Of course, cocoa is one of that, because you cannot compare the price of raw cocoa seeds with chocolates, beverages, and all of that. You know, and you can only imagine the employment that the value chain could provide. So we do know that it's already on. At least we did speak to BII, British International Investment, some days ago, and they told us how they're working with a company that's into adding value to cocoa before it is being exported. But I guess what we want is more of it, especially at this time. We see the price of crude dwindling, and Nigeria needs an alternative to fund the budget to develop infrastructure, bridge the infrastructural gap in the country, you know, to boost economic activities, especially in the real sector. We've been talking about diversifying the economy for a whole long time, but it doesn't seem like we're moving very fast, even though now we hear the reforms are working, they're bringing one benefit or the other, but we still have the stark reality of Nigeria losing out in many areas, especially agriculture like cocoa, agriculture like ginger. So I guess that's what President Bola Tinubu has seen, and then this reintroduction, because I believe we had the cocoa board before now, reintroduction of the cocoa management board. But having the board is one thing, having a functional, effective, impactful board is another kettle of fish, you know. So so these are two different things, and I really do wish we could have Mr. Muftau join us. I know he's in Akure, and they have an event, the cocoa producers. They are meeting even as we speak, I believe, to build on some expectations or needs that might come out of this board, that the government has approved. It's a proposed legislation. I guess I have to emphasize that it's not been created yet. So it does mean that there's a whole lot of work to be done, a lot of considerations to be given to the content of this board, the focus and targets of this board. These are conversations that, you know, should be held now with stakeholders and not create the picture and then dump it on the stakeholders, I guess. No matter how small down the ladder they are important if this is going to work. But we're having difficulty with Mr. Bolarinwa Muftau, the president of National Cocoa Association. Perhaps we'll try to have him tomorrow. Hopefully it will be better. I think it is the venue of the meeting which they're having. So, Mr. Muftau, we hope to get you. I doubt if it will be for this episode of the program, but maybe we'll try to do it tomorrow or next to get clarification on your conversations on the board and its work. So let's switch from cocoa to global and see what Ladi has found for us. Ladi, I know you you love chocolate?
Oh, yes.
You love beverages?
Especially dark chocolate. Like,
oh, God.
Really, really.
I don't understand why you have to go describing it. I don't. Really?
85% dark chocolate.
Yeah, I don't see you working with the cocoa farmers to add value to it. All you know is consume the finished product.
But the good thing is there's a Nigerian brand, you know, that makes, you know, dark chocolates and, you know, different variations of chocolates.
One brand? How many brands?
There's one brand I know, and, you know, I buy that, you know, a lot. I see the international brands, but I move away from those ones, and I say, you know what, I'm buying Nigeria.
Ladi, I'm going to investigate that statement.
Yes, you should.
Okay.
Yeah, we'll go to the supermarket later, and I'll show
your
you.
house.
My house?
Yes.
Okay. Yeah, why not?
Okay. Yeah. All right.
All right, let's see what's happening in the global space now. We'll start with in Hungary. We see the retail sector showed modest growth in March, with calendar adjusted sales rising 0.4% year-on-year, according to the data released today from the Central Statistics Office. This follows a stronger revised increase of 3.2% in February. A breakdown of the KSH report reveals diverging trends across sectors. You see food sales edged up by 1.2% annually, while non-food retail surged 5.9%. Fuel sales remained nearly flat, posting a marginal 0.1% gain. To other matters now, see Vodafone revealed today that their CFO, Luka Mucic, will step down early next year to take the helm of Germany's top real estate firm, Vonovia. The telecom giant confirmed it's already hunting for his successor there, so we're seeing a leadership change right there in that company. Then we see the U.S. Treasury Secretary Scott Bessent and Trade Representative Jameson Greer will hold high-stakes talks with Chinese Vice Premier. He arriving in Switzerland this week, marking the first major negotiations since both nations slapped punishing tariffs on each other's goods earlier this year. The meeting, set for May 8th, comes as the world's two largest economies seek to ease tensions after a bruising trade war that saw the U.S. impose 145% tariffs on Chinese imports, triggering Beijing's 125 retaliatory strikes. The conflict has already, begun weighing on economic indicators in both countries, fueling global market anxiety. Before facing Chinese officials, Bessent and Greer will meet with Swiss President Karin Keller-Sutter. According to statements from their offices, the discussions could signal a potential, talk, though neither side has shown signs of, backing down, from their hardened trade positions. So who knows? Maybe we'll get a deal, with the U.S. and China. And to Germany now. German industrial orders, that jumped about 3.6% month-on-month in March, far exceeding analysts' expectations of a 1.3% gain. The Federal Statistics Office reported that today the rebound, adjusted for seasonal and calendar effects, marks a stronger than anticipated recovery after months of sluggish demand. The surprise leap suggests potential green shoots for Europe's largest economy, though economists caution that sustained growth will depend on easing global headwinds. The Statistics Office noted all data remains publicly available through its regular releases, so investors will definitely be looking out for that. So to some other matters now, and definitely it's about that meme coins at this point. The new data from blockchain analytics firm Chainalysis reveals a stark divide in fortunes among investors of Donald Trump's meme coin. That's fight. Meme coin. The data show that while around 2 million wallets bought into the token, 58 wallets made more than $10 million each, totaling roughly $1.1 billion in gains. Then about 764,000 wallets that purchased President Donald Trump's, that's a Trump meme coin, they lost money on the investment. The Trump token was surged in popularity after being tied to the start of Trump's second term. Has seen sharp price swings and highly uneven returns for investors. Definitely so uneven. Just 58 wallets, made gains, and they made really good gains, about $10 million each. Then huge 764,000 wallets. I don't know if you know anybody that falls into this category. They all lost money buying that meme coin. And we do hear people talk about buying the dip, and some have tried to buy the dip, but we see the dip doesn't really rise. So that's according to data from Chainalysis there. So food for thought there. We'll try and get what happened to Melania's coin, who made profit with that meme coin. But to other matters now. As global trade wars escalate and tariffs roil markets, investors are flocking to gold. But critical questions remain. Have the past tariff battles actually driven lasting gold demand, or are these just short-term spikes? Let's talk to Johnny Poxley now as an investment professional, TLG Capital. Great to have you on the show.
Thank you very much for having me.
Yeah, so I don't know if you've seen this before, in the past, with other, I'm sure we've had, trade wars, before now, and, other tariff policies. But did you see, these kind of trade wars, increase demand for gold? Are we seeing a replay, right now?
So I think what's very interesting and fascinating about the current moment in time is we're almost in a little bit of a state of flux. If you think that Donald Trump's been in power for 100 days, so we're getting a real sense now of what his pledges were during his campaign, what they actually look like in reality. And the truth of the matter is trade wars are going to be a key component. And there's a bit of a sort of equation to it, but ultimately, yes, trade wars do propel the price of gold. So you'll see increased demand for gold and thereby the price come up. Because if you think, like, when when one country implements a tariff on another, country X implements a tariff on country Y, obviously country Y will then retaliate, right? And what that means is the cost of imports and exports will then increase, which will ultimately get passed down to the consumer, right? And then that has obviously ramifications on the economy and so on. Gold in itself is a sort of safe haven asset for many investors because it acts almost a little bit in isolation to a lot of other assets. It's got a very limited supply. It only increases its supply about 1 or 2% per year. So historically, you've seen a lot of demand for gold increase during trade wars and other times of volatility. So I do think the spike you're seeing at the moment is almost like a forecast of inflation that perhaps we'll see later on further down the line.
Right. So I'm guessing if we get a deal now and, the tariff wars, go away, I guess we'll see, gold price, come down sharply. Is that what you're seeing?
Yes, theoretically, if the trade wars sort of peter out and there's a deal, then ultimately I think that will give investors more confidence, right? But it's hard to say as of at the moment, like what that looks like and whether or not it will come to fruition. If you look at the economic uncertainty index, which is probably very closely correlated to the price of gold, it's an all-time high. It's all-time high since COVID. And so long as those kind of metrics remain high, the price of or the demand for gold will in theory stay high as well.
And, when you see these kind of, tensions in the global space, does it lead to the rising, all metals, or is it just gold as a focus? Or investors don't really care for silver?
So I think it's very closely synonymous with precious metals, where you have a small finite supply. So that would be gold, silver, and platinum would be the main ones. Other metals tend to operate a little bit more in isolation. They have their own supply chain nuances and supply chain risks. And more industrialized commodities like copper or aluminium are much more subject to macroeconomic shocks and supply and demand, almost a little bit more traded in the way you might think of as oil. But it's really these precious metals like gold, silver, platinum that investors really seek to as a safe haven asset or a defense against volatility.
Ryan, do you think there are, some other asset classes that, investors might see now as, some kind of safe haven that most investors are not really seeing?
Well, it's a tricky question. I think what's interesting about what's happening at the moment is it's the two biggest governments in the world, so the two biggest traders in the world, the US and China. Commonly speaking, in times of volatility, you would look to US treasuries as well and government assets as a sort of defensive strategy. But the problem you have is the US government is one of the catalysts and one at the center of all this. Right, so that then kind of introduces other questions about why you might flock to those assets or perhaps even some low volatility stocks on the S&P 500. So ultimately, again, I think that really just points towards gold. And I think, again, it's really important just to point out we're at the end of 100 days for Donald Trump. So we're just getting a sense of what this premiership looks like. And it seems as if, a lot of what he said during his campaign is kind of here to stay. And so I think for that reason, it does, as of today, it does speak to the price of gold, and it does sort of make me wonder or make me think that you're going to see an inflated gold price for the time being.
Right, and we've heard some talk about digital gold, that they've referred to Bitcoin as some kind of safe haven, but we've not really seen Bitcoin act as a safe haven with the price volatility that we've seen so far. But going down maybe say 10 years, 20 years, do you see another asset class rising as that safe haven?
I think Bitcoin, I mean, to me, it sort of seems like it has in the past acted as a very, very steady safe haven for many investors. Honestly speaking, if you ask me what my kind of asset that I think is going to be a safe haven over the next 10 years. As you mentioned, Bitcoin has kind of not been that safe haven over the past couple of months, perhaps that you think it might have been. And gold has done very well. So I sort of stand by gold a little bit. And I'm a little bit reluctant to pick out any one asset that I think will be standout as a safe haven over the next 10 years, in all honesty.
All right, so we've seen gold hit, $3,500. We've seen that peak, but do you think that that's the high, for this run, or do you see gold, running even higher? We've heard analysts talk about a $4,000 level. Do you think the top is close, or because right now we're hearing, the U.S. and China, they're going to have talks. They're going to start major talks tomorrow. Do you think the top is, somewhat close for gold?
I think it probably is, because I think we're in a state of flux at the moment, right? The key is uncertainty, right? Nobody knows what's going to happen. Nobody knows where we're really at. But a lot of things point towards inflation. So I think once people know a bit more about what's really happening, and once I think the uncertainty will stay, once it comes down a little bit, you might see things settle down. It seems like it's at its peak at the moment. Maybe it will go up a bit further, but certainly when I think we've learned a little bit more about what these tariffs mean, and perhaps after 18 months of Donald Trump being in power, then I think hopefully things will kind of even themselves out a little bit. But you never know what other shocks there might be.
All right, we'll definitely be looking out if, more shocks come. But, the way things are looking, I guess investors will just be expecting that. Thank you so much, Johnny Poxley, is an investment professional with TLG Capital. Thank you for joining us today.
Thank you.
All right, so this, takes my mind back, to a time when you and I were reporting, the Russia-Ukraine war, on that show. And I remember gold was like $1,600 per ounce at that time when, Russia invaded Ukraine. And, to see the prices now, who's that smart investor that actually saw this coming and bought gold? But we'll see, central bankers, they've been
so it's not just buying gold, but you bought gold and then you waited for that long. It's been like 2 years or more.
That's not a bad, time frame.
Yeah. What do you leave on in that period while you're waiting for your gold?
Well, I guess
to surge?
That's where Warren Buffett comes in. He likes to buy and hold for a long 10 years and above.
Another thing I got from that conversation you had is I think the crypto community is just waiting for a statement to say, oh, the next hedge in the times of geopolitical crisis and inflation is Bitcoin. That's what I think I hear you and your community.
It'll be incredible to see that kind of time.
Talking about, but maybe you just hold on, for a couple of years.
Right.
After all, a lot of people did not see gold at about 3,500, and that's where we are now.
Right.
So just be patient.
But being a safe haven, I don't know, for Bitcoin.
The risk
maybe
there is really high,
Yeah.
All right, laddie, see you later. And so just before we go, we'll tell you the good news at the NGX yesterday. Yesterday was a beautiful day for investors. A lot of money came in. At intraday, the market was at 106,000 level. By the close of trade, it was at 108 and above. Yesterday was really incredible. By intraday, MTN had already gained about 10%. By close of trade, it wasn't just MTN that had gained 10%. You had the likes of GT Bank, and GT Co lost the day before, so investors came in their droves to buy interest and take advantage of that drop in price. So we saw uptrend in Access Core, in Guarantee Trust, in United Bank, and a whole lot more. And of course, MTN was also part of it. EcoBank had 10% close. Northern Nigeria Flour Mills also had 10%. It was a 10%. That's the max, you know, that a stock can gain in one trading transaction. So that's the max that, and a lot of them got that yesterday. So a lot of money came into the market. The market gained more than ₦1 trillion on the market cap, and 1.56%. So it was a good day at the NGX yesterday, and we'll see what happens later on today and see the drivers of it, and a whole lot more. That'll be at 1 p.m. But I hope that investors will not be on the flip today trying to take some of those profits that they gathered yesterday. But whatever it is, we'll always be here to report it to you. So at 1 p.m., Business Incorporated will be here. Ladi will be here. I'll be supporting by then, and Ed will take you around the world of business in 55 minutes. I'm John McQuarrie. I'll talk to you later.